Hey guys, so in today's video, I'm going to be breaking down this beautiful ICT silver bullet trading strategy that actually made me $2,000 just last week. Now, as you can see, this was a 1 to 2 risk to reward trade. I was in and out of it in literally 20 minutes, and I'm going to be giving you a full breakdown from the top down all the way to the execution to show you exactly how you can start taking these trades for yourself. So let's jump straight into it. If I replay the chart, what we're going to do is first and foremost, we're going to go up to the higher time frames and we're going to understand where we are in terms of our structure. So as we can see, US30 has just been on a crazy push to the upside for quite a while. So we've been putting in a series of higher highs, higher lows, higher highs, higher lows, and higher highs until we came and broke below this previous high low, and we actually went and put in this lower low right here. So now, based off of expectational order flow, what we can understand is after a lower low is formed, we expect a lower high and then a continuation lower. So it's just simple expectational order flow, simple market structure. So once we understand that the higher time frames are actually in a downtrend now, we can start cycling down onto the lower time frames to really understand where we are in terms of our structure. So as we can see, price put in this lower low, and then we had all of this substructure, which was building internal bullish structure. Now, in order to understand expectational order flow, we have to understand that when price is putting in a lower low on the higher time frame, the lower time frames are going to become bullish when it's time to put in a lower high. And then the lower time frames are going to flip bearish when it's time for the higher time frames to put in a lower low. Now, if you guys do struggle with any of these concepts, then I would highly recommend going down in the description and clicking the link to become part of the VIP group. And inside there, I'm going to teach you everything you need to know in order to become a consistently profitable trader. So everything from liquidity, fair value gaps, order blocks, order flow, entry schematics, premium versus discount, trading strategies, trade recaps, and even a road to profitability to get you from point A, which is you right now, to point B, which is you becoming a consistently profitable trader. Not only that, but you will also get access to my daily trade setups as well, so that you can be inside of the community and become a consistently profitable trader in 2025. But if you do understand these concepts, then let's go back into this video. And on the 4 hourly, we can see that we are bullish and we're creating a series of higher highs, higher lows, and this is all internal range structure. So that's a little bit more prominent on the lower time frame. And as you can see, the hourly is creating higher highs and higher lows. Now, what this tells us is that the lower time frames are creating a lower high, and then a higher time frame is going to put in a lower low. So with that understanding in mind, we can safely assume that we are in a bearish market, even though the lower time frames are pretty bullish, right? Now, coming down to the 15-minute, we can now start to understand that the 15-minute has actually gone ahead and flipped bearish. Now, the reason for that is because it was putting in a series of higher highs, higher lows, higher highs, until right here when price came and broke below this previous higher low. The exact same fractal thing that happened on the higher time frame is now happening on the lower time frame. So now that we've flipped bearish, we've now put in this lower low, price is putting in this lower high. So that means expectational order flow tells us again that after a lower high, what do we get? A lower low. Therefore, we've now understood that we are in a bearish market. So once we've understood that the bias of the higher time frames is bearish, we are now going to only be entering trades between the times of 3 and 4 p.m. UK time. So if I mark this out on the chart with this vertical line, this is our trading window. 1 hour a day. That's it. You don't get anything else within this 1 hour. If you don't find a trade, you get off your screen. So that 1 hour is the premium time for us to be looking for a trade setup. So as we can see, the trend has been bearish. We've had this push to the upside because of the open of the New York Stock Exchange, but we're not going to take that into account. We're going to remember that we are bearish, so we are only looking for short positions. So now if I play price on, and we can see right here at 3 o'clock, we get this massive push to the downside, but we are yet to take a trade. We're going to wait. What we're going to do is we're going to identify that this is our most prominent low, and this is our most prominent high. Now, what we want is we want price to come and break below this low to signify that we are continuing that bearish trend. And once it does that, we can then safely look for a retracement back and continue with the same fractal nature of the higher time frames. So Let's continue to play price on, and we can see that right here we get a final push to the downside. We break below this low, and this is what we were waiting for. So once we get a break below this low, as we can see right here, price then puts in this fair value gap. And this fair value gap just tells us that this is where an inefficiency in the market lies. So this inefficiency is going to be a magnet for price. And if price does continue in this bearish manner, and it does continue with this bearish order flow, then we can safely take an entry off of this fair value gap with our stops just above that high. And then we're going to target a 1 to 2, a 1 to 3. If the trend continues, we can target whatever we want to. If the trend continues to fall, then it's like trying to go with the flow of the ocean. You're just going to be riding the wave, right? So let's highlight this inefficiency right here. And all we're simply going to be doing is taking our entry at the open of that fair value gap, stops above this high right here, and then we're going to target a 1 to 2. Now you can have extended targets. If we take a look on the hourly, we can see that we do have liquidity sat below this right here. So we've got liquidity below this low. We've got an inefficiency in the market all the way over here. If I highlight it just like this, so we can potentially push all the way down there too. So if we go back to the 5-minute, we can potentially target all the way down here, which is a nice 1 to 3.45 risk to reward. Our immediate targets would be this liquidity that we've highlighted just right here. Then after that, our next targets would be this fair value gap. So even to this liquidity, that would be our 1 to 2. And then from there, this fair value gap would be a 1 to 3.45 risk to reward, which means every $1,000 you risk, you're making back $3,450. So if I play price on, we can see that we get this sniper of an entry straight tapping us in, literally zero drawdown, and then from there we can see that price just immediately dumps. And where does it stop? As we can see, initially price stops right here. It stops at that liquidity. It swept that liquidity, and then straight away from there we had this push up to the outside, and then now we're going to continue down. Now again, if we take a look at what market structure is doing, the same fractal nature that happened on the higher time frames is happening right here too. Lower low, lower high, lower low, lower high. What is expectational order flow telling us? We get a lower low. So as long as the trend continues, we can expect expectational order flow to guide us to our targets. And if I continue to play price on, we can see that we get that perfect tap into that higher time frame fair value gap, that higher time frame inefficiency, and then from there price reverses. So this is why I stress the point that we have to make sure we also understand our exit as well as our entry, because the exit is just as important as our entry, because if you don't know when to get out of your trade, you could have been holding this back to a break even. That's pretty much going to wrap this video up. If you did have any questions, then feel free to drop them down in the comment section. And if you did enjoy this video, then don't forget to leave a like and subscribe. But on that note, I'll catch you guys in the next video.